Good afternoon. The Musings on Winston Capital, and we're going to cover the week of October 24th through the 26th. And what are we going to talk today? First of all, we're back in the Hamptons. We came back from 2 weeks of very fruitful work in Miami, so we should be in New York for the next couple of weeks, and then we start a little bit of a European tour. Big correction on the market, or at least the market was down 4%. What caused the correction? What do we think about that? Valuation, stories like that. That we're going to take a lot of time on that, actually. Then we have elections in Brazil. We have the first reading of the Q3. We put a very special presentation on super HiFi audio. I hope you have received that. And a little bit of what's coming next week, a lot of earnings. So let's start with the markets. I mean, despite the high volatility and the big rallies, at the end of the day, the market was down 4% on the week. And basically, we kind of ended flat for the year. I mean, we were again on a roller coaster, up 9% for the year. We were basically in September kissing the all-time highs. And then we went, kind of back to zero. We're not at the lowest levels that we reached on the February correction, which was 25.50 on the S&P. I'll check it out now. In the meantime, where are we right now on the S&P? But we are way above that. Let me check. Okay. So what caused the correction? It's a combination of factors that I think it has put the market somehow worried. Let me check right here very quickly. Yeah, so the S&P is at 2658. So we have 100 points more to reach the minimum that we tested at the on the kind of February correction. So on one hand, we have the end of QE. We know that the Federal Reserve is buying less bonds than before, and the Europeans less. The rates are going up. That's no mystery, and it got triggered in a way. But that 325 that we printed about 2 weeks ago, in which Winston said, let's sell some 10% of our positions just in case. The dollar has rallied. Now, for the first time, we have 114 on the euro, 128 on the pound. In both cases, there are some idiosyncratic issues there, but a strong dollar is bad for commodities, and it sounds of signals of panic. Then we have the China trade issue, and finally, the midterm elections. So let's go, as I said, rates, we already have it, we discussed. The dollar rally on two things. Italy, more and more confrontation between the European Union in Brussels and Italy about this issue of the budget and where do they want to stand. So clearly, the Italians are pushing for 2.4. Rates in Italy are now at almost 3.5% on the 10-year, while in Germany the same rates are at 0.5%. So that is sending some vibrations and a noise towards the European Union in terms of consumer confidence that is already been decreasing and now is decreasing with some economic activity. On Thursday, the European Central Bank did not move rates, but Draghi made a comment that he sees some soft patches in the economy, something that we've been saying in Winston for a while. So that helped, in a way, the euro go down. Now we go to London, where we have this Brexit conversation. It's going forever. Every week they say that we're almost done, and then we're not done. So on that, we have a 128 pounds. So those two issues sort of, I think scare the markets additionally. China, we don't have a solution. We still, have some conversations. Although last week, it seems that a little bit of a window open where the United States says, listen, we need this in an agenda. We're not just going to meet for a meeting. And one of the issues is transfer of intellectual properties when you do business in China. Remember, we've been saying this for a long time here in Winston, which is the thing is not about buying more umbrellas made in China. The thing is for the American firms to be able to go to China unhindered without protections or obligations to have partners or obligations to transfer technology. That's a view. And we have a meeting next week. Actually, I think it's this week or somewhere, I think somewhere the G20 in Buenos Aires is this week. It could have a meeting between Trump and Xi Jinping, and I'll tie that up. Next Tuesday, we have midterm elections. So we may have an announcement from the president that, there is some advances on the China deal that might, help the market. And then we have midterm elections that so far the market is pricing that the Republicans will keep the Senate and they're going to lose the House, but by a small fraction, so it's not going to be tremendous. Any big change from that obviously could create a market swing. And remember, the polls have been a disaster in the last 5 or 6 years, from from Brazil to Argentina to Brexit, you name it, to Hillary beating Trump. They've been wrong and wrong and wrong. So my point is, like, be ready. And this is probably the combination of all these factors: rates, dollar, Brexit, Italy, that has scared the market. And some of the earnings of the companies were not so great. I mean, for instance, someone like Amazon, they reported great numbers. Sales from 43 to 56 billion, up 30%. Free cash flow, huge. The earnings were big, but Amazon spends the money, doesn't spend, so earnings are not so important. So a lot of growth. The only thing that Amazon said, well, Q4 might be a little bit soft, and that scared everybody because, as we all know, the Q4 for Amazon is the biggest quarter, being a very large retailer. So what do I think? I think this is a correction. It's kind of violent. We sold some more on Friday. Maybe we took some chips off the table. However, we don't think it's the beginning of something super big. And also, you have to be very careful that we could have after midterms a big surprise and a big rally, and also a big surprise on China. So I'll leave it as there. Valuations are also interesting in the sense that the S&P, for instance, will report around $160 in earnings, up 24% year over year. Now, after the correction, the forward PE is 15.6. It was 18.8. For the AGWI, the Old Country World Index, it went from 16.7 to 13.8. So in a way, valuations are not so bad and not so thing. So it is an opportunity to buy. It could be confusing. It's a lot of noise. It's a lot of reporting. We'll talk who's reporting next week. We have Amazon and Google. Some were good, some were not so good. So it's a lot of, here and there, plus all the noise that I mentioned before. So that has put some investors on the edge. My view is like a little bit of caution is okay, but not a reason for panic. This is not bad news altogether, or something that we didn't knew the week before. Moving on. Brazil, we have elections today. Expected Bolsonaro to win. Most analysts think that this is just the beginning of the rally. I mean, we had a very good rally so far. I missed, it was like, the market was up, the Bovespa was up 20% in June, very strong on the Brazil Real as well. So we think that it will keep going as probably he unveils more of the ideas. This kind of rejection of some of the electorate of these very parties of the left, the case of PT, etc., etc. We have the first reading of GDP on Friday was 3.5. The market was expecting anywhere from 3.4 to 3.3, but the good news, the consumer, which is 70% of the GDP, did 4% growth. So the consumer is spending money in America. That's good news. We send it to you a very good special presentation by Winston of ultra HiFi audio. It's on your emails. If you didn't get it, let me know. We'll send it to you. I think it's one of the things that we do on the side that we think are very, very interesting. And then if you're worried, there are some paired trades that might work. Long, short the SPY, long emerging markets, which, we know have a big spread, or short the SPY, long Europe, EZEU, which also has not done very well. So that way, you're hedged a little bit on markets that has been lagging and not doing so well for the year. Now, who's coming next week? On Tuesday, we have Facebook. The market is expecting $1.47. We have General Electric. The market is expecting 20 cents. The first reading of the European GDP, 0.4% compared to 3.5% in America. On Thursday, we will have Apple and Starbucks. Apple on the 30th announced new iPads and new computers. And on Friday, we will have the first reading of the labor report, where the market is looking at 190,000. So a lot of news, a lot of earnings, a lot of volatility. And then remember, the following week, we will have midterm elections on Tuesday. Like always, for our subscribers, 9:45 every morning. More information, you'll find it in our webpage at winston.capital, or like in our YouTube channel, Fabian Onetti. Have a great week.